Thank you, Chair. Thank you, Governor, Deputy Governor, for being here. Governor, it's my understanding that each central bank sets its own interest rates. Is there a global interest rate that would impact a Canadian mortgage?
Global interest rates do impact Canadian interest rates. Global financial markets are very integrated. So in Canada, obviously, we're very integrated with the United States, so the interest rates in the United States have an impact on us. Because we have our own currency, because we have a flexible exchange rate, we can run our own monetary policy, so our interest rates in Canada don't need to be the same as the U.S. rate or global rates. But there is a limit to how far they can diverge. We're not close to that limit. We have the ability to run our own monetary policy geared to what Canadians need.
Okay, just on that vein, we see in the U.S. that the U.S. Fed has held the rate, and yesterday the Prime Minister said interest rates would come down. When you do cut the rate, whenever that does happen, what kind of impact does that have on the Canadian dollar if the U.S. market stays the same and the U.S. holds their rate?
Well, the Canadian rate is already below the U.S. rate. We're at 5. They're at 5.25 to 5.5, and it's hard. It's a little hard to say exactly what will happen on the day. It'll probably, on balance, weaken the Canadian dollar a little bit, but a lot of it depends on expectations. If you go back a few months, the expectation in the market was that the Fed might cut before the Bank of Canada. That expectation has shifted. To some extent, that's already built into the markets. So, yes, I think if we move lower than the Fed, that will tend to depreciate the Canadian dollar. That's partly how monetary policy works. A weaker dollar stimulates our exports, so monetary policy becomes less restrictive.
The Prime Minister said, like I said yesterday, that interest rates would come down. He was sure of that. But his housing agency is also saying, CMHC, that housing starts last year, this year, next year will all decline. In fact, CMHC is saying that we need 5 million more homes on top of whatever is being built. And the National Bank said Canadian households should not expect any significant relief from housing cost inflation. Now, when you lower that interest rate, what kind of impact is that going to put on housing prices, given that the demand has not gone down and it's only increasing?
Well, the housing market is very sensitive to interest rates, and right now the policy rate at 5% is restraining demand. It is making, obviously, the cost of a mortgage higher, restraining demand. If we lower interest rates, it will be less restrictive on housing, and other things equal, housing will tend to be stronger than it otherwise would have been. In our own forecast, we do have a pretty strong pickup in housing over the course of this year. We also have some increase in housing prices. We also expect that supply, while it isn't going to be able to grow quickly, we do expect supply will be growing gradually, and so the gap will be narrowing. But I would agree, it's definitely going to take some time to close that supply shortage.
Yeah, respectfully, Governor, I don't think you fully answered that. We're going to see a supply, we already have a supply shortage in housing. We see a rise in demand, correct?
Yes, we have a supply shortage, no doubt.
And according to CMHC, housing affordability will not meet what Canadians expect today. According to what you just said, would you have a timeline on, given everything, that all the numbers you have today, what kind of timeline are Canadians looking at for housing affordability to come back to what it used to be in Canada?
Well, look, I think housing prices have gone up a lot through the pandemic. They went up 50% in 2 years through the pandemic. They came down about 15%. They're back up somewhat now, so they're net down about 10%. We're not really in the real estate business, but our own forecast is that housing prices will continue to move up gradually. So I don't think you're going to see a big change.
Is there a fear of a cut increasing demand further? That might also push up the shelter inflation?
That is a risk. We do highlight that in our report. I think
is that more of a possibility than not, given housing starts are decreasing?
Well, in our forecast, as I said, we've built in a fairly strong growth in housing activity through this year, and we've built in some increase in prices. So, we've taken that risk on board in our base case projection. It could be even stronger than we expected, and that is a risk that we've highlighted.
Okay.
I just add that, the housing sector is an important part of the economy. It's an interest-sensitive part of the economy. It's certainly something we watch very closely, but we need to run monetary policy for the whole economy.
Thank you. And thank you, MP Hallen.